Very good evening to all of you for having connected, and thanks to the management, Jayendra sir and Alok sir, for taking the time out for the call. Arman Financial had come out with its results on 29 June. However, the time has changed when we had last hosted the call with that national lockdown and implementation of the moratorium decision by RBI has impacted the business. So we would request the management to share their view on how has this affected the company and what are we doing to maneuver this situation and what lies ahead for us. So over to you, sir.
Thanks a lot, Bhavik. Hopefully I'm audible to everybody, and good evening to everyone. Thank you all for joining this call and taking the time out of your busy day for the FY20 fourth quarter ended results discussion. I'm joined on this call by Jayendra Bhai, who's the MD, and Vivek, the Group CFO. We have issued a detailed press release and investor presentation for the past quarter and the past year. Hopefully all of you have had a chance to review it. As we all know, these are unprecedented times, and many of you are very concerned about the COVID performance versus our past performance. However, I would be doing a disservice if I did not start with the terrific performance we have had in FY20, at least until February 2020. Therefore, I'll begin by giving a brief overview of our financial performance for the fourth quarter and the full year, and post that provide an update on the operations, the liquidity and the collections post-COVID lockdown. As you can see from the results, our operating performance was quite good in the fourth quarter until February, and we continue to witness a good growth momentum. Our consolidated loan book grew by 26% year over year to 860 crores on back of robust traction seen in the MFI and the MSME segments, which grew by 28% and 48% year over year respectively. Our COVID-adjusted consolidated AUM would have been approximately 940 crores with a 37% YOY growth had we managed dispersing all of our loans in the pipeline in March. Continued growth in new customer additions coupled with a marginal increase in the average disbursement size helped in achieving sustained growth in both of these segments. Our two-wheeler book, however, recorded a decline of 7%, being adversely impacted by the ongoing slowdown in the two-wheeler sales throughout last year and further exacerbated by the emergence of the COVID pandemic in March. A silver lining here is that our rural two-wheeler book continues to see a good traction, growing by 68% year over year to 11 crores at the end of FY20. As a result, it constitutes more than 10% of the two-wheeler AUM now. On the disbursement front, we recorded a marginal 4% year-over-year growth in Q4, even as the COVID pandemic impacted March disbursements substantially. We saw a strong pickup in disbursements up to February as the disbursements rose by over 30% in the first 2 months of the quarter. In March, however, due to the COVID-induced disruption, we were only able to complete 20% of our disbursement pipeline, and this led to a lower booking in AUM and disbursements by approximately 75 to 80 crores. Adjusting for this disruption, our AUM and disbursement would have grown by 35 to 40% in the fourth quarter. Net interest income grew by 36% during the fourth quarter. Strong growth in net interest income helped us post a sturdy operating performance as the pre-provisioning operating profit grew by 34% year over year to 15 crores. As a prudent measure, we earmarked 6.7 crores as contingent provisions for COVID and further took an aggressive write-off of about 3.9 crores for the pre-COVID NPAs during the fourth quarter. I know many of you are going to have questions around that. As a result of the higher provisioning, profit after tax declined to 3.8 crores. Adjusting for the additional COVID-specific provisions of rupees 6.7 crores, the Q4 profit after tax stood at 10.5 crores. which is a 46% growth year over year. The adjusted ROE for the quarter stood at 24.7%. Discussing our performance for the full year FY20, we've had a very good year barring, of course, the month of March. We posted a solid all-round performance with the pre-provisioning operating profit rising by 73% to 74 crores. And despite higher provisioning, profit after tax grew by more than 50% to 42 crores. For Arman, this is a milestone as it marks the highest annual net profit reported by the company since it came into existence a long time ago. Asset quality continued to remain robust with gross and net NPA standing at 1.1 and 0.2% respectively at the end of FY20. Further, we remain adequately capitalized with a consolidated debt-to-equity ratio of 4.1, which excludes direct assignments, of course. We had a total of 211 branches. 170 of those are for MFI, 35 for MSME, and the balance for two-wheeler as of March 2020. As a part of our expansion strategy, we launched 43 new branches during the year. Of the new branches launched, 32 were for MFI and 11 were for MSME. Now moving on to give you an update on the post-COVID operations. As most of you are aware, we had to close down all of our branches, temporarily of course close down all of our branches and HO post the lockdown announced in March. We gradually started reopening our branches from the fourth week of May, but movement on the field was highly restricted until June 1st. I'm pleased to say that as of today, most of our branches are fully operational, with a few of them operating from alternative locations as they were initially located in containment zones. Further, during the past quarter, we rationalized our MFI branch network by consolidating some of the smaller branches into larger branches. This led to a reduction of number of MFI branches from about 180 at the end of Q3 to 170 at present. On the liquidity front, we have enough cash reserves to cover the necessary OPEX for the next 6 months and debt obligations for around 3 months. Our liquidity position has improved materially in June with collections picking up. As a result, we have repaid all of our debt obligations due in June and not applied for any moratorium. During the month of April and May, we have received moratoriums from our lenders of 72% of the amount due. We had more than sufficient cash reserves to cover the rest. Further, we have raised approximately 75 crores since the lockdown at attractive rates to strengthen our liquidity position. 2 notable fundraisers include NABARD and SIDBI, which have been raised at very attractive rates of sub 7%. As the ground level collections increase, we have also begun to repay the moratorium installments to many of our lenders. Moving on to the collection side now, we had extended a moratorium to all of our MSME and MFI customers for April and May. We have resumed collection process from 1st June onwards, and so far the response has been quite encouraging, in fact better than we were expecting. Repayment rates for June 2020 dues closed at 59% for the MFI segment and 85% plus for the MSME segment. The remaining customers remain under moratorium, though most of them have expressed a desire to resume repayments in 1 or 2 months and are not expected to use the full moratorium tenor available until August 31st, 2020. We expect July to close with significantly higher repayment rates. On the two-wheeler side, as the collections happen in electronic form via NACH and direct debits, we continued to accept collections throughout April and May, providing a moratorium to only the customers that specifically requested for it. Total moratorium for April and May were approximately 45% and 50%. However, in June, the collections have picked up sharply, with total collections against June demand closing at approximately 95% for the two-wheeler segment. Operationally speaking, we feel that the worst is behind us, and in the next few months we'll be focused on getting the repayment rates back to normal, towards which we have made significant strides in the month of June 2020. In terms of disbursements, we had stopped disbursements post March 20th and have not resumed them yet. We have also not given any top-off loans or top-up loans. Depending on the repayment situation, we are planning to start disbursements slowly from 15th July onwards, with a tighter screening process in branches which cross 80 to 85% repayment rates and are otherwise located in areas with low COVID disruptions. We do not expect disbursements to reach around pre-COVID levels until September 2020 at least. Finally, to conclude, our primary focus will remain protecting our asset quality, improving collections from the field, maintaining a healthy liquidity position, and keeping our operating cost in check. The situation on the ground will require us to be nimble and consistently adapt to a very dynamic situation on the ground. On the whole, we remain confident of overcoming these near-term challenges and getting back on our growth trajectory as the conditions gradually normalize. We sincerely thank everyone, including everybody on the call, for your support during this very difficult time. This pandemic is not an Arman or a microfinance or NBFC or financial services problem. It has affected every business and every person one way or another globally. This also means that the combined human ingenuity is devoted to defeating these problems. So we will all persevere and beat this together. I'm confident about that. For Arman, just like demonetization in the long run, I hope COVID is a small footnote in an otherwise wonderful journey. With this, I think it is time to move on to the questions. Before we start the Q&A session, I just want to add a disclaimer that we might not be in a position to give answers to any predictive questions. So the answer we don't know should be considered a valid answer to questions like COVID-related loss estimates or projected timelines to normalcy or other kinds of questions which, quite frankly, will be nothing more than educated guesses. So thank you once again, and request Aisha to open the line for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Anand Bhavnani from Unifi Capital. Please go ahead.
Hi, Alok. Hi, Jayendra. I hope you all are fine. Nice to connect. Two questions from my end. One is in terms of our expansion plans. Now, we had a sharp, increase in branch openings in last 2 years. How does that trajectory change? Like, would it be safe to assume that from here on, we might see very subdued branch openings? That is one. And second, while, the collection efficiency in microfinance is at 59 is interesting, if you could juxtapose this number with, other peers, if you have any sense of how collection efficiency has been for rest of the players in the sector.
Sure. So as far as expansion, of course, in line with what we normally do in the months of January and February, we had a very detailed expansion plan and expansion strategy in place. Of course, all of that has gone literally tossed out of the window at this point. And once the situation normalizes, we'll have to rework everything. So along with my disclaimer, my first answer is I don't know at this point. Of course, come September, once the repayment rates normalize, I'm not against opening branches. It will be subdued compared to the previous years. But I'm okay opening it. As I said in my remarks as well, some of the smaller branches or some of the nearby branches, some of the split branches, we have, just for a operating cost perspective and keeping everything streamlined, we have recombined them as well. So, in fact, the number of branches have kind of reduced, because we've increased their operating area. Wherever we could find efficiencies, we have kind of done that over this lockdown period. So let's see. I think I'll be in a better position to give you an answer once we talk again, probably in September time frame. Now, as far as microfinance repayments, it really depends on what kind of states you are in. As it seems right now, there are certain very good states. So and again, I don't have any hard numbers to give you. As far as your question related to peer collection, I have heard numbers between, from 45% to all the way to about 70% is what I hear. People have different ways of calculating it. Some people have given top-offs and things like that as well. So it's all, sometimes you have to take it with a grain of salt or a bag of salt. It just depends. But the states which are performing quite well, so for us, Gujarat has performed extremely well last month at almost 74% repayment rate. Everybody is having a problem in Maharashtra, in Orissa. We are not in Orissa, but Orissa is there. We are not in Assam, but Assam is there. People seem to be doing quite well in Bihar. Again, we are not there. So I think it's a mixed bag. To give you a further idea, MP we managed collecting about 60%, Rajasthan about 56%, UP about 55%, Maharashtra was in the lower end at about 42%.
Oh, wonderful. That's very helpful. Just a follow-up to the collection efficiency. Now, 59%. If in the first week of April I had told you that we'll be getting to 59%, would have you been happy, sad, or neutral? So I just want to understand from the number that it has come. What is is it in line with expectation, higher?
It was quite above my expectation. Now people have accused me of being a little bit of a pessimist. I think it's nice being a pessimist when you run a finance company. But my expectation, rather everybody's expectation, was around 30 to 40%. So I think the industry itself is very pleasantly surprised. And if you talk about our MSME collection at 85%, that was clearly, I was blown away. That is very excellent, well beyond of what I was expecting. The credit is my team, it's not like I went out and did it. And they did it against all odds in places where it was very hard to move about, with a lot of threats and a lot of violence, and it was a mess. So the credit really goes to the team.
Sure. And lastly, is it safe to assume that, given that government has extended the food security lines for the vulnerable section, this and the other government programs, the Manrega scale up and everything, this in effect is slightly positive for companies like us, because this kind of...
It's very positive, it's whether you agree with it politically or not is a different story, but any welfare kind of support that the rural segment or the bottom of the pyramid segment gets will be very good for me, of course, because that's one less thing for them to worry about, and they can concentrate on their businesses, and once they start resuming their cash flows, they can start repaying me. So it's very good.
Wonderful. Thank you. I'll come back in the queue.
Thanks.
Thank you. The next question is from the line of Viraj Mehta from Equirus PMS. Please go ahead.
Hi, Alok bhai, and congratulations, and hope you are safe. I just had a couple of questions. One, in terms of incremental lending, you said will be started sometime in July. Just wanted to understand what are the credit checks that you will keep? Because see, when people are in moratorium, it's like we are flying blind. We don't know the credit quality of the person in moratorium. So how will we decide? And that moratorium still exists till August. So how will you decide about disbursement, about credit checks at that point when we are still flying in this moratorium phase?
So it will be different for the different divisions. If I think about microfinance, we have a plan in place that we have many branches which have reached 100% repayment. So to lend money to those areas seems like kind of a no-brainer. Of course, there'll be certain occupations and things like that we'll have to stay away. So on a case-to-case basis, we'll plan that out with the area managers and the regional managers. But the places where the repayment has gone up, I think there is not much of a risk of restarting it. In fact, these people really need money, right? I mean, everybody needs credit at a time like this. The second aspect is there are certain occupations which are very less affected. So again, I'll just give you an example. So if you look at the western side of, or the eastern side of Gujarat, where the milk belt of Gujarat, that has been performing extremely well. During demon that was badly impacted. This time there is very little impact, so we are getting amazing recollections there. So that's another area that we can consider. Our past customers, people who did not take the moratorium and repaid on time, we have customers that are paying two installments even together, even though they got the month of April we couldn't even go out and collect. But there is still a subset of customers that did pay us through electronic means and other means. So those are very safe customers that if they are done with their loans, we can start lending to them. So you can create these filters in place, right? And different places will have different filters. On the microfinance side, you certainly can. On the MSME side, on the two-wheeler side, again, you can block out certain occupations, only give it to areas which, people in the rural side, in occupations that have not been impacted that much, or in fact, some of them are even thriving at a time like this. Two-wheeler, what we are doing is we are increasing the down payments, increasing, the risk checks and all of those other things. So just tightening the credit norms.
Sure. And my last question would be, at a time like this, the only thing in our control would be what kind of cost-cutting measures as a firm we can take, right at an operational level to our finance costs and other things. If you can highlight few measures that we have done in this last few months to tighten our belt.
Well, operating cost side, if you want to discuss that, any kind of projects that could be put on hold, we have put on hold. That includes the software conversions that we were planning, the other kinds of frill projects that we are talking about. We did not have much layoffs, to be honest with you. Still, there were certain people that were hesitant to come back because they were scared, or they were located in areas, or they were getting pressure from their wife or whatever it could be. So those guys, of course, they went out of the payroll, and that saved us some money. Very few back office kind of staff, especially related to the disbursement processing, we put on LOP after a while, in the month of May, but those should be rejoining as soon as we start our disbursement, should they choose to. So on the operating side, honestly, there is not a lot of cost cutting you can do besides what I told you. Our largest expense on an operation side is payroll. And I have always believed that you have to protect your people at a time like this, otherwise, they will never stand up.
Right.
So we have not, I have been against laying off, very honestly. So on the On the financial side, I mean, it's a seller's market, but due to government support or whatever, we got NABARD money came in at, Vivek will know the exact figures, but about 7%. And the SIDBI money is actually been sanctioned and everything. We are about to receive it today or tomorrow. That came in at approximately 7% as well. Mudra money we raised right before this COVID. That came in at about 7-8%, I believe.
Yes, 7%.
Strides of reducing that as well. Vivek, any corrections there?
Yeah, no, that's absolutely fine. And in fact, even in March, we were one of the few which were able to raise funds on ECB, external commercial borrowings. They were pretty well priced as against our overall costing. And we also raised funds on NCD from our existing lenders in March. So I think, proactively and, with governmental support, as Alok just said, I think on the finance cost side, it's been fairly well priced in these tight circumstances. But it's going to be again a very tight market as we go further into the quarter two and so on and so forth. So we'll have to see how it phases out then.
Sure. Just last follow-up on this is, with the yields, government bond yields and repo rate, everything dropping, even though it's a seller's market, but and you have raised money at 7% from both the organizations, would we see a slightly lower cost of debt for us going forward?
Yes, I think that hard to predict right now. The repo rates and stuff are going down, but people see as that's incremental riskier, so their the rates might be adjusted to account for that. But I think it's a fair assumption to say that, yes, at least in the short term, we should definitely see some rate benefits.
Okay. Thank you and best of luck, Alok.
Thank you.
Thank you. The next question is from the line of Amit M. from 2.2 Capital. Please go ahead.
Yeah, hi, Alok. Just on this collections front, just can you explain this MFI versus MSME? The MSME numbers are actually quite good. So what has been driving this performance in the MSME segment?
Honestly, most of the portfolio is in Gujarat, and Gujarat has been doing quite well. And especially if you look at, a lot of the portfolio has been in the western Gujarat as well. That's where 50% of the portfolio is. So if you look at it on the area-wise, there is not much of a very large difference between MFI and MSME. Of course, MSME is about 5-10%, a little bit higher, and I'm not exactly sure how to explain away that 5-10%. But still, if you adjust it for geographies, it's a little bit closer together. So I guess we lucked out of being in the right place, and that is not through talent or anything. It's just luck at this point.
So because you have lesser MSME portfolio in Maharashtra or Uttar Pradesh, where collections are slightly lower, because of that overall numbers look better for MSME.
Exactly. So we have a very, very small portfolio in MSME in Maharashtra. About, Vivek, again, correct me if I'm wrong, but about 75% is in Gujarat. So.
Okay. And in Q4 numbers, Vivek, you were saying?
Yeah, so 75% still continues in Gujarat. And surely, as against microfinance, this is fairly a new portfolio, so the touch point is also much higher.
Okay, understood.
In the Kutch area in MFI, for example, we have collected over 100%. So not only did we collect everything that was due in June, but people paid in, even for the moratorium amounts. So it's really quite a different story when you go area to area.
Okay. And in Q4, the yields in the MSME and two-wheeler business were down substantially quarter on quarter. What was the reason for that?
Vivek, you want to get that? Because
I probably missed the first line. Could you come again, Amit?
The yields in the MSME and two-wheeler business were down Q on Q substantially. So can you explain that?
No, on MSME, what has happened is we've done some portfolio sellout in November. So that would have directly impacted the yield because that portfolio was off balance sheet and we are recognizing only the gains. So to that extent, the revenue will not register that yield. In terms of two-wheeler, I think overall two-wheeler has been, the yields have been softening because of overheatedness and, the overall two-wheeler segment not doing so well. So we've seen some bit of softening in the two-wheeler segment anyways.
Yeah, I mean, that segment has been struggling even before COVID. And overall sales have been down as well. So there was a portion of where we had to cut rates and things, especially during the Diwali time, the season time, we had some specials going on. So that impact you would see like in the running quarter.
Okay. And on the liability front, what are the principal and interest repayments which are due for this quarter to lenders? For this quarter?
This month it's about 48 crores. Next month it's 42. And Vivek, what is it after that?
September would slightly increase again because we'll have some NCD interest payments and so on and so forth. But close to about 135, 40 crores.
And this is including the interest payment as well.
Yeah, absolutely. The entire debt servicing.
Okay. So then you have, since you're already collecting 50 crores plus from your borrowers, you have even capital to keep growing again if you want to grow through disbursements. You don't need incremental capital for growth right now from lenders.
Well, Amit, in fact, what it is now we have a reverse problem. It's always a good problem to have, but we have too much cash. I think we are sitting on some 125 odd crores of cash. And, the board had directed us to keep a certain amount as a minimum to begin with. But yeah, you are absolutely right. I mean, we are collecting money from the ground and the disbursements have not started. So the cash is starting to pile on. So what we have done is we are starting to repay at least the high interest kind of moratorium lenders for the months of April and May as well. I think once we start the disbursements, this thing should stabilize to a certain extent. But yeah, we are collecting more than enough right now to pay off the monthly dues.
Okay, got it. Thank you. That's all I had. Good luck for the next few months. They'll be quite challenging, I'm sure.
Oh yeah, for all of us.
Thank you.
Yes.
Yeah.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Parag Zariwala from White Oak Capital. Please go ahead.
So I have 2 questions. One is, with respect to collections, do you see any difference in trend, let's say in first 1 month of unlock down, which may be, let's say, from 15th May to 15th June, and post 15th June, maybe last 20 days, is the collection qualitatively different across the 3 segments you operate in? The reason I'm asking this is, a lot of companies are highlighting that, the problems have started happening in last 15-20 days again, because earlier there was a lot of pent-up demand or, for multiple reasons. That's first question. Secondly, how do you see your equity capital position in this scenario? I'm sure at least for this year, we may not require any capital for growth purpose. So how do you see that? When do you want to raise capital?
Yeah. So to answer your first question, I have heard from different players that if you compare, well, I have June data. I don't know much about May or April because nobody was really collecting, right, during May or April. But in June, there are companies that said we started off slow at 20%, 25%, and by the end of it, we got to 60%, 70%. For us, it doesn't work like that. So our regular demand is basically from the 1st to the 12th, right? So all of our EMIs fall due on the 1st to the 12th. So during that, we collected, I believe, around 42% of whatever was due from the 1st to the 15th. And then the latter part, which is overdue collection. I mean, let's not call it overdue collection, but not on time collection. So that came in, the balance about 20% came in during the latter 15 days. I have not noticed any of a slowdown. In fact, I guess if I pull out data for the last 2 days, we have been collecting between 68 to 70% on the 1st and the 2nd of whatever was due. So it seems that it's little too early to tell, and I don't want to jinx it. But it seems, touch wood, that, and I'm not superstitious generally either, but it seems this month is starting out to be even better than last month. So let's hope this trend continues. And I have not heard that the last 2 weeks for anybody being worse than anybody else. And your second question, as far as equity, I mean, it's no big secret I was in the market to raise some equity. Unfortunately, this COVID thing happened before I could close. I'm still open to raising equity. In fact, it would be nice to have some equity cushion, although I do believe that we are out of danger. Still, it would be nice to have some level of equity cushion. So I'm open to it if there is some interested investors. The question will be about valuation at this point. So I don't know. I mean, if you can find some kind of a middle ground, I'm always open for it.
Sure. Thank you.
Thank you. The next question is from the line of Varun Rao from Kasba Capital. Please go ahead.
Hi. Thanks for taking my question. I just wanted to check, when you say your collection efficiency 60%, how do you define that? Is it by number of customers paying on time, or is it by amount?
No, it's the amount.
Amount.
So
okay.
Whatever was due in June, whatever EMI, including interest, which was due in the month of June, how much cash did we collect? Right. So simple formula. Whatever we collected divided by whatever was due.
Okay. And if you were to analyze the rest 40% of the amount due, or the customers who have not paid on time, what is the sense you are getting? Have they lost their livelihood, or are they simply conserving cash and they have intentions to pay back later? What is the sense, and what is the profile of these guys, if you can give us some sense?
Well, I don't think there is one profile or anything like that.
Or any belt? Is there a particular belt which is affected? Generally wanted to get the sense.
Well, see, the thing is that there is a lot of fear. So it's not even just about livelihoods. There is a lot of fear, and when there is fear, you have a tendency to hoard cash. That's including myself and including Arman and everybody, right? I mean, I had more than enough cash on my balance sheet to even pay off April and May, but I still, harassed my lenders to give me a moratorium. So the tendency is that when there is uncertainty in the market, people tend to hold on to their money. So a lot of them are those kinds of customers. The second layer of customers are people that, have lost. Many of my customers have, or rather most of my customers have multiple sources of income. So continuing our example, let's take the cattle farmer for argument's sake. So a lot of the customers, the woman which we lend money to will be tending to cattle at home. The husband might be doing some scenting work or road construction work or something during some times of the year, and they might have a small tract of land where they're doing the farming. Now, in that example, one portion of the income is cut because the construction and stuff has stopped, right? I hear it's been picking up, but for arguments of sake, let's assume it's stopped for now. So in that case, they have enough money to, sustain themselves, but they don't have enough money to pay their EMI. But is it going to continue? No. Eventually the husband will go back to work, the cash flows will return back to normal, and they'll start paying us. I don't exactly have percentages to give you. We're still analyzing all of that stuff, and a lot of the data is still coming in. But most of very few customers have told us that we won't be able to pay your money, and don't come back. And if you ever ran a finance company, even if somebody intends to do that, they never tell you on your face. Nobody will tell you on your face that we don't want to pay you. They'll say that, well, I don't have money right now, come back next month, come back in 15 days, come back in whatever, come back after the moratorium. So in places like Maharashtra and stuff, that's a lot that we are getting from customers that, why do you hear, the government has given moratorium. A lot of kind of political influence in that side also saying that don't pay, the government has given moratorium. So people are asking us that come back after August and we'll pay you. So there's every flavor in between that. It's very hard to give you slices, unfortunately.
Just one last question. I missed the part on the collection frequency. What is the collection frequency, or when does the collection or the due date typically happen in a month?
So we have about 85% of our customers are on a monthly collection cycle. So that is from the 1st to the 12th, and about 15% is on a bi-weekly cycle. That means we have to go twice to get the money.
Just to add to that, Alok, that's only for the microfinance. For MSME,
yes, I was asking only for microfinance part.
Excuse me, yeah. So for the MSME side, it's all monthly, and that we collect it from the 1st to the 12th. And the two-wheeler side, we use NACH and direct debit, and that gets deposited on the 7th or the 8th, depending on, if there's a weekend or something like that. And we pull whatever we pull through that, and then our collection team works from the 10th to the 10th to recover that, whatever is left.
Okay. And operationally, has there been any changes, say in terms of the size of the group or the frequency that you meet customers, or have you changed anything, or it's just gone back to the old way of, or more digital or anything?
Everybody's focused on collection. So in our MSME and then in our microfinance side, the same guy who's dispersing is doing the collection also, right? But instead of doing it for 12 days or 15 days out of the month, he's doing it 30 days since there's no disbursement. From a two-wheeler side, we have different people. Of course, there's sales and there is collection team, but everybody's out collecting right now. But we have not added anybody. In fact, the team size has gone down a little bit.
Okay, that's it from my side. Thank you.
Yeah.
Thank you. The next question is from the line of Ayush Agarwal from MAPL Value Investing Fund. Please go ahead.
Thank you for the opportunity and great set of disclosures, sir. I had a couple of questions. First was, like you had mentioned that, in the moratorium period, some people did reach out to us to give back their money through digital modes. So are we thinking towards those steps that, if we can collect our payments through, digitally, then that will actually reduce a lot of OPEX for us. So are we taking a step towards that?
Yeah. So that's an excellent question. In fact, post demonetization, what happened was everybody had projects in place to move towards the cashless disbursement.
Mm-hmm.
I think what's going to happen is post this COVID, people are going to move towards the cashless collection as well. So we already have projects in the place to start using UPI and QR and all of these fancy things in place to start collecting digitally. However, it will have to be done very carefully.
Right.
Because the reason our repayment rates are so good in microfinance compared to personal loans or stuff in urban areas or whatever you want to call it, is because of the high touch model, right? Even in our MSME, I mean, we go to their doorstep to collect the money, and that high touch kind of model creates the right pressure points to make sure that people continue to pay on time. So we don't want to lose that, At least I won't risk losing it until we do a lot of piloting and a lot of kind of analysis. So what we'll probably come up with is some hybrid model where the collection is in electronic if somebody chooses to pay electronically. But we don't lose that kind of high-touch center meeting kind of model. So we'll see. I mean, a lot of people are doing some great innovative kind of thinking right now, including us. But it will take time. I think that to move towards 100% cashless is not going to be possible in a year or two. It will take at least 2-3 years.
Right. I completely agree with you on that. And second question would be, when I look at the presentation under our lending partners, we have added a new name under securitization partners. It's called Neogen. When I look them up, they're pretty small players and they only came into lending a couple of years ago. So how did we choose them, and what quantum of our loan book would be securitized with them?
Vivek, you want to get that?
In terms of lender, I think, let's be honest, the lender chooses us rather than the other way around to a large extent. So that's a MSME pool that we've sold out to them.
Okay. And what would be the quantum of that pool? Can you share that?
That's about 70 odd crores.
Okay. That's it from my side. Thank you.
Thank you. The next question is from the line of Mihir Kulkarni, an individual investor. Please go ahead.
Thank you for taking my question. So when I look at slide number 16, average tenor of active assets stood at 12 months. So how do I read into that? So does it mean that all that we have given as loans, they'll be paying us within the next 12 months?
So how that average works, and again, Vivek, correct me if I'm wrong here, is that let's say you have a pool of 100 customers. Customer number 1 might have only 1 month left in their tenor. Customer 2 might have 22 months, and customer 3 might have 3 months, whatever. If you take the average of all of that, it will be 12 months.
So in a way, it's a weighted average that you take for both the
weighted average.
The lender as well as the borrower.
Okay, got it. Thanks a lot. Best of luck.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
I wasn't expecting to make closing comments. Well, I think we'll keep it short. Thanks everybody for your interest. We are always available should you have any other further questions. Let's wait and watch how these things work out. But, I'm mentally and everything, I'm at a lot better position than I thought I was in March and in April. So things are going not amazingly, of course not. I don't think it's any time to celebrate until our repayment rate reaches 90-95%. But we are on our way, and thanks everybody for your confidence and the trust you have on us. And we'll try to make sure we don't let you guys down. So appreciate it, and over to Bhavik or to the operator to close the meeting, please.
Yeah. Thank you so much, sir, for taking the time out for the call.
Thanks. Yeah.